Hey, everybody. Welcome back to Earnings Call. My name is Jeffrey Beamer, and I am the Senior Investment Strategist over at ewotrader.com. Welcome to a very special edition of Earnings Call. What makes this so special is that this is the last earnings call of the year for 2025. There are quite a few names that we are focused on, but after this week, this is the last full week of trading for the rest of the year. So next week, we have the week of Christmas. Obviously, there's half days, and then the market's closed on Christmas. The following week, we have New Year's. So we will not be doing earnings call again until January 5th after today. So stick with us, because heading into the week of December 15th, which is today, the 15th of December, markets face a very interesting blend of meaningful results between earnings and critical economic data that could derail this rally that we have going into year end. Okay. So key corporate earnings, because that's what we talk about here on the show. We have Lennar and Worthington Enterprises to begin the week. In fact, there are no qualified earnings today. Beginning tomorrow, though, we have those two, Lennar and Worthington. And then midweek, we have General Mills, Carnival Cruise Lines, Carmax, KB Home, and a couple of other names, including Nike. It's there too. We'll talk about where a Nike fits in our basket here in just a moment. So those are the headlines. Let's get right to it and get on with the show. Now, we do talk about lots of stocks each and every week, so there is a chapter feature at the bottom of this video, so you can jump to a particular name that you find of interest. And remember, we will cover last week's case study, and we'll talk about a new trade for this week, because yes, we still are trading this week. So you'll want to wait till the end when I cover that information. But here's our list. It's broken out into what we call breakout stocks on the left and consolidation stocks on the right. Breakout stocks are stocks that have greater than a 10% move. That's being estimated by the option market makers and by past earnings results. Stocks on the right are quiet stocks, stocks that are single digits, meaning they move you maybe 3, 4, 5, maybe 7% through their earnings announcements and really don't show much more volatility. We call those quiet stocks. And again, that's what market makers are predicting, and we combine that with the past results to determine how much we expect that stock to move through earnings. All right, so let's start with the quiet stocks. Let me show you an example here. All right, this is a classic example. This is Pfizer. Now, Pfizer does not have earnings this week. It's not until like the first week in February. But I like to show you this chart because of how quiet this stock is. You can see this stock is at the time this snapshot was taken, it's a $24 stock, okay? And it's really been in a $10 range and over the course of over a year, all right? So this is very quiet. I have the earnings highlighted with the ellipse, and you can see the stock just does not move very much through earnings. That's a good example of a quiet stock. This stock usually moves about 3% through earnings, so not very much, okay? So what's going to move not so much this week? Well, let's take a look at our list here. We begin tomorrow. As I mentioned, there's no qualified stocks today, okay, either on either category. But on the quiet category, we start tomorrow with Lennar. Now, we have a publication called Delta Neutral Income, and this is where we produce trade alerts for stocks like this through Delta Neutral Income. And we do this by selling premium going into the earnings. Why do we sell premium? Because option implied volatility is elevated. And that is the preferred method when going into an announcement like an earnings announcement, when you have a quiet stock that just doesn't move very much. All right. And we can profit from that collapse in implied volatility. So you can see the names here. We have Micron, General Mills, FedEx, KB Home. In fact, two home builders, Lennar and KB Home this week. Conagra and Carnival Cruise Lines. So let's get started. Let's go through the list here. Okay, let's get to Lennar. we'll start with that. Remember, there's no qualified stocks today on Monday, December 15th. Just it's getting pretty quiet right now. But we do have earnings tomorrow, Wednesday, Thursday, and Friday of key players. So let's start with tomorrow. We have Lennar, and the average move here is just 6%. Now, this is a $119 stock, and you can see it's pretty volatile. I mean, it'll go from 130 to 120 pretty quick. And it'll go from 140 to 130 pretty quick. And it will go from 115 to 125 or, 130 really quick. So it bounces around, but we're not worried about that overall trend. We just want it through the earnings announcement. In fact, this past earnings announcement, that is a 6% drop right there. Okay. It moved its estimated move. And that's what we like because we can then control where we are selling premium. So Lennar will declare tomorrow, Tuesday, the 16th of December, after market close. And as I mentioned, the average move here is just 6%. Okay. Now, compare this to General Mills. This is a little harder stock to trade for an earnings play. Okay. So I'm specifically talking about earnings because it's right at that, just under that $50 mark. And this is really where I like to keep it at a minimum, is that $50 price target. Okay. But General Mills is a good quiet stock. As you can see here, its average move is about 4% going through earnings. Now, they will have their earnings announcement on Wednesday, the 17th of December, in the morning before market open. All right. And you can see here the last earnings announcement. You just see how quiet. I mean, yes, it had a good day afterwards, but that's only like a 1.5%, maybe 2% move for the stock. And it just doesn't move very much. Previous earnings, this little drop here is right at 3%. So, yeah, it's a pretty quiet stock all around. And that's what happens when you get these big conglomerate type companies that are well diversified in their product line. It's really difficult for them to produce some sort of earnings result that's just going to make that stock gap, 20% and take off. Okay. It's really hard for that to happen. And believe it or not, Micron technology is on our quiet list. In fact, the volatility of Micron has really been sucked out. And when I'm talking about statistical volatility, that's what you see on the chart is statistical volatility. That is the price movement that you can see on the chart. And look at the last earnings announcement. I mean, the stock just really didn't move through earnings. So Micron is going to declare Wednesday, December 17th, after market close. And we're only expecting about a 7% move. So I'd be very careful with Micron. I mean, a lot of the tech-oriented stocks are starting to move negatively, and this might have a little bit more volatility than it has had in the past. I mean, look at the June results. I mean, it just literally dead sideways. But this is a $243 stock, and we can definitely look at putting on a trade on this that can absorb a move of 7 to 9% with an Iron Condor, selling that premium. So you can see here recently that volatility has picked up. You can see it in the price movement. And that's just what concerns me going into this earnings announcement. So I'd be very careful with Micron going into this cycle. Okay. But still, depending on where the option market makers price those options, it's how we determine whether to take that trade or not. All right. Moving on, we have Cintas. This is a $188 stock. They will declare on Thursday, December 18th, before market open. So first thing in the morning. The average move here is about 7%, which is a little interesting to me for Cintas. That seems to be a little bit more volatile than what I might expect. In fact, last earnings cycle, as you can see here, it really didn't move much at all. And I don't have the previous cycle on there, but I think that was around June. So looking at the whole month here, not much really going on. It might have been actually July 2nd there with that big candle, but nonetheless, it just doesn't move very much. It's not moving double digits, I can tell you that. And we would expect that same kind of move. And again, another nice stock to trade because it's a $188 stock. That means there's a lot of options up the chain and down the option chain that we can choose from to sell premium going into that earnings announcement that will happen Thursday before market open. Okay. Also on Thursday, we have KB Home. Now they will declare Thursday 12. That question mark should not be here. That will be December 18th. This will be after market close. All right. The average move here on KB Home is about 7%. Now, home builders are really at an interesting crossroads right now between demand and pricing power. So this might be an interesting cycle for Lennar and KB Home. But I'm impressed at how KB Home is actually in a little recent uptrend here and is near its highs. So it'll be very interesting to see where the home builders are. It depends on what part of the market you serve, really. Okay. There's a difference between Toll Brothers, Lennar, and KB Home. There's a big difference in quality and a number of homes they build. So definitely one to watch. But the average move here, nonetheless, is single digits. It's only about 7%. Okay. But it is a $64 stock and may be a little hard to trade, but we'll have to look at the option chain for that. Now, another notable that's going to announce this week is FedEx. And look at that rally that this stock has been in. That's a beautiful tight channel, a little steeper than maybe a 45-degree angle, which is what we like to see as a market technician. But FedEx is going to have earnings on Thursday, December 18th, after market close. But the average move here is about 6%. All right. So even with all this volatility, statistical volatility, look at that big move right there. Look at their last earnings announcement. There's just not much movement there. Single digit movement through the earnings announcement. Single digit move through that earnings announcement there. Even though it gapped down, that was about 4 or 5%. That was it. All right. So an Iron Condor, where we take in a net credit for our trade, really is kind of the preferred method here. Though I could see some additional volatility going into this earnings cycle, I would be very careful with FedEx as well. All right. All right. So we're getting into the latter part of the week here. We do have Paychex. They will declare later this week on Friday morning. We get into the Friday morning trades here. They will declare Friday, December, my little dyslexia there, not 21. How about 12? December 19th before market open. The estimated move here is about 6%. All right. So Paychex, as you can see, last earnings cycle, very quiet. The stock is, in a nice little downtrend here. Yes, you can have nice downtrends. For a trader, that's no problem. We can make money both directions as an option trader. All right. So it'll be very interesting to see where Paychex has its earnings results on Friday morning. Okay. So, but at $115, we should be able to create a nice little trade out of that. And hopefully we can use for options that expire on Friday. And that way it doesn't have much time to move anyway, and because they would expire the same day they have earnings. But let me show you, this is a $116 stock. And let me show you the difference here. Here's Carnival Cruise Lines. This is a great quiet stock. All right. The average move here is about 7%. But as you can see, it's a $28 stock. This is a little harder to trade. All right. And sometimes there is the ability to trade stocks that are in that $20 to $40 range. Sometimes there isn't. But Carnival Cruise Lines, it can show a little volatility. Look at this last earnings cycle. That's quite a bit of volatility, although we call that kind of a whipsaw action where it opens higher and then sells off the rest of the day and closes lower. Okay, but when you take that and compare it to the previous day, that's not much of a move. That is a single-digit move when compared to the previous day. Here it gapped a little bit, but again, single-digit move for the stock. So Carnival Cruise Lines, it usually is in the headlines for one reason or another. That's why we like to include it on our list. But it is a quiet stock, only moving about 7%. All right. So that's it for the quiet stocks for now. And let's move on. Let's move on to our breakout stocks because these are the names that everybody loves to definitely watch, if not trade, because we get big movements from these stocks. Here's an example. This is Akamai. Now, Akamai does not have earnings this week. All right. They don't have earnings until late January, early February of 2026. All right. But you can see here that around the earnings cycle, which I have highlighted with that ellipse, you can see that this stock gaps around. All right. It really moves, and it moves double digits on average. Okay. So this is a fun stock to trade. And we use strategies called Straddles and Strangles going into that earnings announcement. And yes, implied volatility is elevated, but we buy Straddles and Strangles because once the stock goes in the money, okay, if it goes in the money on the call or it goes in the money on the put, then there's not really any IV risk because there's what's called intrinsic value. There's real value to that option, and we don't get that intrinsic value issue. So that is what we have going on with these real volatile stocks. So let's take a look at our list for this week. And, you'll see some key names here. What's interesting, we have two Worthingtons. Now, again, no earnings, qualified earnings today, but tomorrow we do have Worthington Industries with Worthington Steel on Wednesday. All right. So, and then there's some surprising names on there that we'll talk about in just a moment. So let's get to our list and begin with Worthington Industries. All right. Worthington Industries will declare earnings on tomorrow, Tuesday, December 16th. After market close, the average move here, look at this. Look at this difference. It's 19%. Okay. That is not only the average, that is what the option market makers are pricing into those options. Now, this is a $57 stock. So it's on the more affordable side. A trade should be around $600-700 for a straddle or strangle. All right. We are looking for a double-digit move. You can see the last earnings cycle, that big gap right there. I mean, that, one day you open up at $60.26, and the next day you look at where it closed and you're at $53.29. That's over $7 move for a $60 stock. So that's over 10%. Okay. Maybe not the 19 that is the average because this stock does gap around. Now it's, I don't know if this is a sister company or not, but Worthington Steel, it does the same thing. Okay. It really moves and has the same estimated move. Worthington Steel will declare earnings on Wednesday, December 17th. And that will be after market close. Okay. The average move here is 19% also. So you get these, I'm not worried about the overall trend, nothing. I'm just worried about what is going to happen going into that earnings announcement and after market close on a $35 stock. Hopefully we could get this for $400 or $500 and then get a big move from the stock. And, steel is in one of those sectors is starting to get a little bit more attention and a little bit more eyeballs on it. So this might be a good opportunity if the pricing is there. All right. Now, another name that you may not be familiar with, this is MillerKnoll in certain industries. So Herman Miller acquired, I forgot the name of the other company. Forgot what the other part of Knoll was, but nonetheless, I didn't seem to get my data there. Let me just update that. All right. So MillerKnoll will have earnings on Wednesday. All right. So let me put that tag there. We're going to do it on Wednesday, the 17th. It'll be aftermarket close. Okay. So let me just move all this over for you. Oh, let me put it up there because more room up there. All right. Aftermarket close. So let me just add that. So we're going to do 12/17. Okay. Aftermarket close. And let's see if the average move is still, I have it on a list here. Actually, it dropped 1 percentage point. The forecasted move is 13%. Okay. So it's still pretty volatile stock. But MillerKnoll, as you can see, last time it gapped down, or it had a big down day, but it was the next day. Look at that big follow through day. So on its earnings date last time, it dropped 4%, which is not 13. But then the following day, it dropped 10%. Okay. So between those 2 days, it definitely exceeded its estimated move. Previous earnings, look at that. You can just see that pop right there. So this is a volatile stock that does gap around through earnings. And if we can get the right pricing, then a straddle or strangle will be the preferred method to make money on an earnings announcement with Miller-Knoll. Okay. Now, a stock that I do like trading is Carmax. Okay. They will declare earnings on Thursday, December 18th, before market open. Now, Carmax usually is pretty volatile. They have an estimated average move of 16% through their earnings announcement. So this thing, as you can see, not only does it gap around through earnings as it did last time, but it'll gap around even when it doesn't have earnings. Okay. This stock is a mover. Okay. Even around its other earnings announcements, big day prior to earnings, then a collapse after earnings on this stock. I mean, this thing gets to be volatile. That's why it's fun to trade, fun to watch. Okay. So again, Carmax on Thursday, the 18th, before market open, the average move there is 16%. Now, I usually don't include an $11 stock in our list, but I did. I wanted to. I'm sure maybe you've never heard of this stock before. Okay. It's Innovative Solutions and Support, ISSC. But I included it here because this stock has an estimated move of 31%. By far, one of the biggest movers that we have here. And again, this is over the past year and a half. This is over 6 earnings cycles. That is the average move for this stock. Now, the ISSC will declare earnings on Thursday, December 18th, before market open. And again, the average move there is around 31%. And you can see here, this stock, look at this. Back when this stock was a $7 stock, the next day it closes at $9.79. Okay, that's a $2 move on a $7 stock. That's a big percentage move. So, let me just move that over to the proper date. I didn't mean to move that. So anyway, ISSC, we were going through our same process, see where the options are priced, see if there's any value there. And we look to then capitalize on any, what we call mispricing. It's not that it's really mispriced. It's just that it may move more or less than its estimated move. Okay. Because you have a lot of people doing different types of analysis on the stock. Maybe they miscalculated what their estimates were, and the stock surprises Wall Street, and it will move bigger or worse depending on the viewpoint. But here's a consistent one, and it's, believe it or not, the book company Scholastic. Okay, they will announce earnings on Thursday, December 18th, after market close. And again, once again, a mover. Average move here is 19%. With Scholastic being a $28 stock, I like these that are this inexpensive. This is much different than trading a stock that's $300 or $400, because the difference there on that $300 or $400 stock is your debit for your straddle or strangle could be $6,000-$7,000. Here, it might be $300 to $400. That's a big difference. Okay. And yes, it's a big difference in potential returns as far as dollar amounts go, but it's just that you're risking less usually. Okay. So if you're using proper trade management, money management, then this is a much more affordable stock to trade than, say, a $300 or $400 stock. All right. And that is Scholastic. Again, Thursday, December 18th, after market close, average move there of 19%. And then one that I think might get a little bit more volatile is Winnebago. Now, they're going to declare Friday morning, the 19th, before market open. The average move there is 10%. Now, that's not a big mover, but just some of the news that's coming out from that industry overall might make for a more volatile trade out of that earnings announcement. So if we are seeing a straddle or strangle that maybe is being priced for an 8-9% move. This might be a value play where we can do a straddle or strangle, and then maybe they surprise or disappoint. Maybe they really disappoint, and that stock is trading at $25 tomorrow. Okay, that would be the type of move that we would be looking for. All right, not that it is. Okay, that's just visualizing and of what could be, but again, that's from a sector and a company that's they look towards a company like Winnebago for their numbers, because they are a widely popular and long-standing creator of RVs. Okay, RV manufacturer. Okay, so anyway, look forward to Winnebago. Weston, LW. It will have earnings on Friday morning, the 19th, before market open. The average move here is about 17%. This is much more like it. I mean, this is a $60 stock, easily tradable. Again, we're looking for maybe some pricing that doesn't match what could potentially happen. But Weston is a volatile stock. As you can see over the last two earnings cycles, you can see these big gaps and big moves right after the earnings announcements. And that's what we're looking for again. Now, I do have, to wrap up our list, I do have two names that didn't make our list, but are notable names nonetheless. Okay. One is Darden Restaurants. All right. Now, they did not make our list, our quiet list, because you can see here the estimated move is just 8%. But because on Thursday, when they declare earnings, so Darden is declaring earnings on Thursday, the 18th of December, before market open. But the reason they didn't make our list is because there's other candidates that are better, that will possibly move less and therefore are better candidates than Darden. Now, Darden, I have to tell you, is a $186 stock. And that's why I wanted to talk about it, because there are a lot of options here, and we should be able to create an Iron Condor spread that is wider than, say, 8%. We should be able to do 10, 12% away from the money above and below, and really bracket that in preparation for a big move. As you can see, last time this thing took it on the chin last time. It has the potential to move pretty big. So I'd watch out for Darden. It could move more than 8% on Thursday. And finally, Nike. We could not let the week go without talking about Nike. Okay, they're going to declare on Thursday, the 18th, after market close as well. But the average move here is about 8%. All right. Believe it or not, it just doesn't move very much. It's not a big double-digit mover like some of the others, so they did not make our list. All right. But doesn't mean we can't make money on it. All right. But it's a difficult one because it's kind of right there in that middle range of 8%. It might move 9%. It might move 6%. And that's just, it could make money on one strategy, not on the other, and then vice versa. So it's maybe something to watch given its current pricing and its current average move of just 8%. All right. So let's bring up our list one more time and close out this section. Don't forget, stick around for a few more minutes because we have the trade from last week, and then I have another trade for this week for you. But here's our list, okay? And you can see this list is the best possible candidates for both strategies. Now, the breakout stocks we do through a publication called Delta Neutral Breakout, all right? And we send those out to our subscribers each and every week because there's earnings all the time. Every week, there's not a week that goes by that we don't have earnings, with the exception of the 2 weeks that are in front of us right now. All right. So I'll touch on that when we close out the show, but let's get to our trade from last week. All right. Last week, we did a trade on a quiet stock. All right. That was Costco. And we were looking for the stock to just not move very much. So we did an Iron Condor. So if you look at you see the stock chart on the left, and on the right is the risk graph. And every time that black line, specifically the black line, which is at expiration, changes direction, there's a strike price. There's an option being traded. So an Iron Condor is a four-legged trade, meaning 4 different options at 4 different strike prices. You do it all at the same time. Any decent option broker has this as a pre-made strategy. You can just, create it easily on your broker's website. And we're looking for this stock to stay in that range, okay? Where we sold the calls on top, sold the puts on the bottom. We're just looking at it to stay right there. We took in just about $1.08, which is near the low end of what I like to trade for the risk that we're taking on. All right, but let's see how we did. Okay, so this trade went through earnings, and look at that. Through earnings, this stock barely moved. Implied volatility dropped, and literally in 4 days, we made a 27% return on our money. 27% in 4 days. Now, we have done better than that, of course, but I would take that each and every day. Some people would take that as an annual return. And we're looking at taking it in 4 days, a 27% return on risk in just 4 days. And yes, that profit of $108, that may not sound like much, but if you're trading let's say you're trading a small account like a $5,000 account, that's a 2% return. That's a 2% return on portfolio in 4 days. If you're doing a $10,000, did the same trade on $10,000 account, you made a 1% return in 4 days. Doesn't sound like much? Yeah, but we do these each and every week. So you're looking at last week we did a trade that had $149 winner. Okay. So that's 2.5 percentage points in 2 weeks on a $10,000 account. That would be 5% a month. You annualize that out, that's a 60% return on portfolio. Okay. In a year, just doing these short-term trades. All right. But guess what? This week I have something different for you. All right. We're going back to the volatile side. And yes, we've had some good track record with these, and we're going to take a look at our trade of the week this week, which is going to be Carmax. All right. So Carmax, we're going to do a strangle on this. This is buy call, buy put. No margin required for this. All right. Just buy call, buy put. We are doing 2 different strike prices. That's what makes it a strangle. And we are looking for that stock to break out, either up or down. I don't know which direction, and I don't care as long as it moves. All right. As long as that thing moves and we have a nice, attractive trade given the stock's recent performance of volatility in and outside of its earnings announcements. So again, that's our trade of the week. Is just a simple strangle on Carmax. Now, we will talk about this trade when we come back in 2 weeks. Well, actually 3 weeks, because the next 2 Mondays we are taking off because there will be little to no. There's a total of 3 stocks that will declare earnings next week. None of them are over $100 million. And the same for the following week. They're small micro cap stocks. Nothing that we can really trade. All right. So for the next 2 weeks, we're going to take a break. We will be back Monday, January 5th. And you will want to tune in to see how we do with Carmax. And because we have some key earnings that week. And then the next week, guess what? Begins the next earnings trading cycle when all the big banks declare earnings. Okay. JP Morgan, Bank of America, Wells Fargo, they all are in the early part of January. So you will want to stay tuned and dial in each and every week right here on Earnings Call. That is our session for this week. Everyone have a wonderful Christmas and a Merry New Year. Happy holidays to everybody. Thanks for joining us. And I will see you on Monday, January 5th of 2026. Take care.